Just looking at some breaking news here for you on cash ISAs, I can see here in the Financial Times, they're reporting that Rachel Reeves is putting reform of UK cash ISAs on hold following all of the backlash that they've had about reducing that potential amount of allowance from 20,000 down to a significantly much lower amount. Now, this was widely reported on and widely expected to take place in Rachel Reeves's Mansion House speech, which will take place next Tuesday. But at the moment, it looks like it's being shelved, and I'm sure many people will be quite pleased about that. There's been a huge amount of speculation in the media and here on social media like YouTube, etc., and videos of people saying that the cash ISA was going to be reduced down to potentially even £4,000 or maybe around £5,000 a year. Well, at the moment, it stands at £20,000 a year that you can put in to your ISA account and then invest or save, in this case, completely tax-free. But that looks to have been shelved. Now, one thing I would add at this point is that anything can change. And of course, if the Chancellor does want to change her mind and put this in to the speech on Tuesday, that this could happen. I still, even if it was reversed and changed again, have a U-turn of a U-turn, nothing would ever take place, unlikely until the next financial year anyway. Okay, let's just break this down a little bit more detail because not everyone would have even been aware of this change. So the speculation was that £20,000 allowance that we can all save or invest into our ISA accounts was going to get reduced. Now, that was specifically going to get targeted at the cash ISA. It had nothing to do with your stocks and shares ISA, your lifetime ISA, or your innovative finance ISA, although most people probably don't even know they exist. Now, the idea behind it, I think, is a good one, but the execution is another story and another matter entirely. The whole idea was that there's an enormous amount of money currently saved up in cash ISA accounts from people in the UK. I'll go over the figures in a moment, but it's quite an enormous amount of money. The idea is if you reduce that allowance to £4,000 or £5,000, as was suggested in the media, that effectively you can force more money to go into important assets that actually grow the economy, such as investing into UK assets or UK stocks and shares on the UK listed market. Now, that all sounds great, but in reality, most people have no idea how to invest their money, what they're meant to do, and they see it as entirely risky. You can pull up all kinds of data and surveys on different people explaining to you why they choose to save their money rather than invest it. Many people will cite things like they have no idea what to do, they consider investing to be super risky, so therefore they choose to use a product like a cash savings ISA, I should say, to protect their money from tax and effectively do the right thing. Everyone really is encouraged to spend within their means and save lots of money. And this is really what the cash ISA was designed to do. And it's probably the simplest type of ISA that we have here in the UK. And I think a lot of people have got a kind of a grasp of what it is and how to use it. Now, cutting the cash ISA and then just leaving everything else as it is sounds good, again, on paper. But the issue you're left with here is, and I was trying to think of an analogy to kind of come up with this. I think it's something like this. It's trying to say, you're trying to encourage more people to use a bike, for example. And you say, right, in order to do that, we're going to cut the amount of miles that you're allowed to drive in the UK in your car down to 8,000 miles a year. Now, most people actually don't even drive 8,000 miles a year. However, if you come out and do that, that's not going to incentivize people to get on their bikes. Firstly, because you can't do everything on a bike that you could do in a car. It's highly unpractical. They're almost two things, chalk and cheese. But also, where's the incentive? Where's the carrot to get on the bike? I think really what I would have liked to see here, alongside lots of other people, is actually the incentive to help people invest rather than removing effectively an incentive from people to save their money instead. Clearly, there is not enough incentive to get people to start investing. Otherwise, they would do it already. And I think it's down to another key factor, which I will touch on just toward the end of this video. Let me just break down some stats for you because I think they're really interesting. And I think they show that the way of tackling this problem isn't quite the way that Rachel Reeves and other people have tried to lobby her to get to change the cash ISA. Looking at the latest stats you can see on screen now, around 18 million people in the UK have a cash ISA, and there's around £300 billion inside cash ISAs, of around 50 billion inside of that was put in just last year. So that makes the average saved in an account around 13,400 people. Now, another interesting key stat says that almost half of these accounts are held by people earning less than £20,000 a year. So it's really an account for people who are just trying to really get that first amount of savings into an account. And I would make an argument that a lot of these people probably aren't ready to invest just yet. They're getting there, but they're not quite ready to invest. Now, just touching on that £13,400 average amount savings, technically, everyone investing here, if their earning is inside the basic rate of income tax, does have a savings interest allowance. I'll put up on screen for you now, but most people should be aware of this. Basically, if you're a basic rate income tax payer, you're allowed to make up to £1,000 per tax year in interest from savings. Now it drops down as a higher rate payer to just £500, and additional tax rate payers, boohoo, get your violin out, you don't get any tax-free allowance for savings interest. What this means is that technically, even if you had £13,400 outside of an ISA, you wouldn't even pay a penny in tax anyway. So just cutting down people's allowances of how much they could put into an ISA anyway, I don't think even scratches the surface or just tackles anything to do with this problem. So at the moment, even if someone didn't use a cash ISA account and had all of their cash savings in a bank account or just a regular savings account, not protected from any kind of tax, most people still wouldn't actually pay any tax at all. And I'm not even sure that most people are even aware of that. Like, for example, if I just look at some of the best rates on the market here for 1 year worth of ISA from the likes of Trading 212 and other providers who may even bump you up with a bonus rate close to 5%, let's say it was 5%, I mean, you could save £20,000 in your account and you wouldn't even have any tax to pay. And even if you did climb slightly above that, it would only be a very small portion of tax to pay anyway. Okay, so putting these shelved changes to one side, which ultimately could happen, so we should be ready for them. What can we actually do, and what should we actually be doing as a country to actually help people get invested in the first place? I've wrote a few things down here and I'd love to share them, but more importantly, I'd love for you to share also in the comment section below. I think the first thing we need to do is scrap stamp duty on UK shares. Now, at the moment, every time you buy UK listed shares from the UK Stock Exchange, you're charged 0.5% every time you do that. So no matter whether you put in £100 or £10,000, 0.5% is going straight to the government coffers. And that doesn't apply if you're buying US shares, for example. So very much from the outset, you're penalised for buying UK shares. I think this should be removed entirely, whether you do it as all in one go or you do it steadily. I think this would at least help to some extent, because the feeling at the moment is that you buy a UK share and you're already behind in fees with 0.5%. Yet you can go to the US market, and yes, you do have to pay a conversion between pounds and dollars, but you can get access to some of the most exciting, fastest growing companies. You know, everyone is interested in ultimately the companies that are growing fastest and get all the news coverage, like, Nvidia, etc. No one's interested in the boring ones on the UK market, but I think you would get a little bit more interest if you reduce that or just remove that entirely. Secondly, and I can't state this one highly enough, I've wrote this one down here multiple times in my notes in front of me: education, education, education. Ultimately, at the end of the day, there's not a culture in the UK of people investing and understanding how to invest in the first place. So the whole idea that you could just reduce the cash ISA allowance and that would encourage people to invest, you may encourage some people, because some people may think, okay, I'm going to take the time to learn now. But the vast majority of people just don't know what to do. Investing is seen as a scary thing and this very risky thing. So we have to do a huge amount really as a society to encourage people and create a culture of investing and people talking to their friends and families and just getting ourselves used to investing money for the long term. Very much like the culture is over in the US. The UK is very much lagging behind on that front. And not many people actually directly own stocks and shares. Now, lots of people will have a pension, or pension they don't even know about, and pensions they auto-enroll into. And most people don't know that that money is invested into the stock market in some shape or fashion. So really try and educate yourself. I would encourage the government of whatever flavour to really start to educate people, and not just a one-off marketing campaign to try and get people to open up a stocks and shares ISA. It's a continuous marketing campaign. I think they should do it with the people, financial influencers, for example, on every single different platform. Reach people where they are, get to people, explain the benefits of investing, host podcasts, get experts in, explain how easy this thing is to do. And I'll try and do my part. And even though I have Beginner's Guide to Investing and loads of helpful videos on my channel, and that might have tens and hundreds of thousands of views on some of them, but that's just scratching the surface. And as much as I'd like to reach more people, we can only reach more people if we all do it together. So really, we're all responsible for that one. But I don't think we can shy away from this one. I think that's one of the biggest points we need to cover. This next one's interesting too. I have said that we need more UK-based investments. Now, what do I actually mean by that? So if you look at the UK market at the moment, the likes of the FTSE 100, the majority of those companies generate most of their revenue from outside of the UK. So for example, it's close to about 80% now of all of the money generated in those UK listed companies and get all of their money sold internationally. So that sounds like a good thing. So these are quite big companies based here, the likes of AstraZeneca, for example, lots of big companies, and they trade all around the world, which sounds good. But I think when people say they'd like to invest in UK companies or UK investments, really, we're trying to talk about things which are close to home. Maybe things like UK green energy projects, for example, or UK infrastructure projects. I'd like to see a way almost where your regular average retail investor could get a piece of larger infrastructure projects, and whether the government can kind of guarantee some level of returns for that, or wrap them up in some kind of tokenized form like they're starting to potentially do over in the US, I think would be really interesting. And if the government could backstop that and say, look, there's a minimum, for example, amount of money that you could be covered by this investment or something like that, but some kind of ways and incentives to invest into these UK projects that at the moment will only be for, institutional sized investors. So something like that maybe could be a bit of a curveball, but I think this could be really interesting to try and get more people invested. And one final thing, yes, we could potentially revisit the British ISA. Now, when this came out initially, I did make a video about it, and I did say specifically, this won't even see the light of day. We don't need to complicate ISA products anymore. ISA is already complicated, but I do think it was thinking along the right lines. The idea that you could have an additional level of allowance, it was £5,000, was touted to say that this had to be invested into UK companies, I do think is a good thing. But doing it by adding another form of ISA account when most people haven't got a clue how ISA accounts work in the first place is a terrible thing. So maybe some kind of combination of what I've just spoken about there, and maybe some of the ideas which you can put in the comments later. But any way we can do, anything we can do really to encourage people to invest in the first place. But I do genuinely think this all comes back down to education, and just keeping that going through the ages, whether you're at school trying to learn some of these basics, but also more importantly, employers helping people understand how their pensions work, and just a general culture of getting used to talking about finance and talking about investing openly with each other. It's not a British thing to do. It's very awkward talking about your salary, how much you make. And yes, it feels very weird when I do monthly portfolio updates showing you the money I put into my pension and my ISA. But you get over it and it just becomes normal because at the end of the day, no one cares. So just got to remember that one. Now, like I said, I'd be really interested in what your thoughts are. And remember, anything can change. This U-turn can be U-turned again. And this doesn't mean that it shelves completely, but we do know that it's just not going to happen on Tuesday at least. So just let me know your thoughts. I'll see you in the next video. Happy investing.